Let's go to Oliver Sloup of Blue Line Futures in Chicago. And Oliver, a bit of a snapback here on the grain markets for corn and soybeans, but not in the wheat by any stretch. What is it that's weighing on the wheat here?
Struggling to find its footing here, and I wouldn't be surprised to see that become a little bit more of a common theme here going forward. $7 is obviously psychologically significant. If the bulls fail to defend that on a closing basis, and we break down and close below that with some conviction, I wouldn't be surprised to see the selling take us down to that 670 area, which was kind of near the previous contract highs and secondary breakout point from April 22nd. So that's kind of the line in the sand that we're keeping an eye on. And the fact that it's trading lower when corn and beans are trying to find a little bit of strength is definitely a little bit of a caution flag. Now, for corn, we wouldn't be surprised to see a little bit more relief here, maybe up towards that 680, 690 level for that July contract. But if we fail to get out above there, we could start to see what would be a head and shoulders pattern developing on the chart, which could potentially be bearish. Now, we know that the USDA report last week wasn't really enough to feed the bulls going forward, and now you've got all the talk about all the acres that we're going to see in this next month's report, upwards towards 97 million acres. That's about 6 million more than the USDA had in their prospective plannings report, so you're starting to see some of that long liquidation pressure prices, and I wouldn't be surprised, again, to see that become a little bit of a trend here on rallies.
Wouldn't those extra acres be at the expense of soybeans, though? Wouldn't that be bullish for soybeans or not?
Yeah, and that's why we're seeing soybeans hold up a little bit better. We had the steep sell-off on Thursday, but the soybeans held their own on Friday, and again are holding their own here in the early morning trade. They're expected to be relatively similar acres for soybeans, so we're holding around that psychologically significant $16 handle. I think the fundamental backdrop is still pretty stout for the soybean market, so I think the bulls still have a little bit of an advantage on that end.